What's going on, investors? EBS Invest here, back with a brand new video. We are checking out the company United Healthcare Group, and the ticker is UNH. This is one of the largest components of the S&P 500, roughly $500 billion market cap. The company is based out of Minnesota and is the 7th largest company by revenue, and is the largest healthcare company in the United States. This company is massive, and we're going to evaluate its stock today. So, going over here on Yahoo Finance, you can see on the max chart this stock, it's like a bullet, more or less like a roller coaster, but in recent years has been trending very highly. In the 1 year, this stock outperformed the stock market by roughly 5%. On the 6 month time frame, it's down roughly 4%, and in the past 5 days, it's down roughly 8%. And apparently, there is a class action lawsuit that alleges that United Healthcare underpaid its out-of-network providers. So we will see what comes of that, but that has scared a lot of investors as well as people within the company, and therefore stocks have been sliding as of recent. You can see today it was down 2.8%. So we're going to evaluate, is now a good time to get into United Healthcare, or is it best to wait out this boat? Going over to its financials, you can see that in 2019 they had $240 billion in revenue, and in the trailing 12 months they have roughly $313 billion. But in their 2021 they had $285, so they've been increasing their revenue very well. Same thing goes for gross profit. You can see 55 here, 67, and 74, so they have increased profit as well. Coming down to earnings per share, you can see their earnings per share are up as well. And you can see that overall the stock, and as well as its financial statement, is very solid. Going over to its balance sheet, you can see it does have a lot of assets. It does have liabilities, but that's to be expected. It has a lot of debt, roughly $46 billion worth of debt, but I wouldn't be too concerned, as it seems to be that they have a lot of cash to cover that. You can see they have a lot of cash flow, roughly increasing their cash flow as well, but they have $33 billion in cash flow in trailing 12 months. And they have roughly $31 billion in free cash flow. So this company is a cash flow producer. I wouldn't be as concerned about their debt. Going over to the summary, you can see they offer a 1.2% dividend yield, roughly $6.60. According to this, has a 1 year price target of $597. We'll see if that's accurate with my judgment.
Interrupt our program to bring you this important message.
It does have a higher than normal PE ratio than what I'd like to see. It's 25, so it's a little bit more expensive, but this company is high quality. It's among Apple and Microsoft in the AAA bond rated. Only those three companies, to my knowledge, are in the AAA bond rated sector. Going over here on Charles Schwab, you can see that they get an A from Schwab. They are a AA leader. And I was interested, and this is my favorite company to look at reports from, the CFRA stock report. And they recommend this as a strong buy, with medium uptrend expected. But you can see how the stock follows this 12-month price target fairly well. And United Healthcare has been growing lots of their revenue. I'm not going to go through this entire report. If you want a copy, I can send it to you. I usually read through these copies to evaluate my companies. But they have a 12-month price target of $650. So, judging from that, we will go over to the analysis page, and we're gonna see if this stock is worth the buy by using our intrinsic value calculator. So you can see they expect them to grow at 13% in the next few years. When I was researching through the stock reports, they said 13 to 16% is possible, but is likely that United Healthcare will grow at 11%. So with 11% in mind, we put in the earnings per share and 11% growth rate. The bond yield has been lowered recently due to, seems to be that rates on the AA bond has fallen. So we get an intrinsic value of $592. Going over here, interestingly enough, their model says $597. So we are pretty darn close. I think our calculator does a good job at representing what other people on the market think as well. So doing some math, we can take those numbers, divide by itself, and you can see that we get an overall, it seems to be on discount by about 18%. So is that 18% worth it for you? Well, that's for you to determine. Don't worry about this track your dividend stuff. I don't have that software anymore because I'm a brokey, as Andrew Tate would say. No, I'm just a broke college student. If you want to give me track your dividends, that'd be awesome. I'd really like that software. But at an 18% potential upside, it could definitely be a buy. I would personally wait until it comes a little bit farther down. I think with this lawsuit that is in mind, it could bring the stock down a little bit. But if you were to buy it, judging by that stock graph, it tends to just go up. It's a very high quality company, very strong balance sheet, as well as just a strong company in general, followed by its leadership. So I would rate this company as a buy to hold. I'm going to keep it on my watch list, but I'm definitely going to be doing a little bit more research into what all will happen to this stock this year. It did outperform the S&P 500 in 2022, so it could be a good weight and holding for your portfolios to help hedge against the market. This has been EBS Invest. If you enjoyed this video, please leave a comment or a like. It goes a long ways with the algorithm. A subscribe would be nice. I'm trying to get to 100 subscribers by the end of 2023, as that is my goal and my mission. This has been EBS Invest. See ya. Peace.